Alright, this is the morning drill down for October 19th, Friday. Let's take a look at the equities. This is the daily chart on the S&P 500 futures. You can see the ascending channel we've been in. We recently found a high back on September 14th. We've been trading off of its lows for last couple weeks, last month or so. We have two descending lows, one at September 26th and the most recent one at October 15th. And since this most recent low, the one on the 15th, we've traded up to a new high just yesterday, in the yesterday session on the 18th. And started coming up that since. So we're looking to see if that high can become the start of a retracement. I've drawn a 5-0 from that low to the of that range, from the 1421.4 low to the 1464.4 high, and we're just kind of keeping an eye on that level to see how far it might retrace down to. I think overall we're still expecting an uptrend, just based off of what it's been doing since June. Some reasons for pause, or some reasons to maybe have some caution with that uptrend theory, is the fact that we've had these lower lows. I've drawn a trend line connecting the low from September 14th to October 5th. So you can that's what this dashed line is. So if this does start making lower lows and turn into a reversal of some sort, I have the trend line drawn to see if we end up getting a bounce off of that, or if we can break through. A break of this area has us looking for breaking the next high from September 14th, which would confirm the uptrend. So I think right now it's still up to the sellers to prove to us that they can take over and start some sort of reversal or consolidation. Everything's looking like an uptrend right now, but those are some of the areas where some sellers might take the opportunity to enter some orders, trade against, and see if they can build some momentum. So again, right now in an uptrend, but since we've been going up for the last few days, we're looking for some sort of retracement. It's the move's been extended, and we need a better price before we start looking for longs. Some of those areas could be somewhere like a 38.2% retracement. Any of these 5-0 levels between like the 38 all the way down to the 76.4. And we also have this trend line, this dashed trend line, where I connected the lows from June 4th. You can see we hit this low on July 25th, and all the way through the low that we made just earlier this week on the 15th. So if you connect these lows, 1, 2, 3, you can see the trend line extension. So we can look for some sort of confluence of a Fibonacci, a 5-0 number of this most recent movement, and the trend line. You can see any of those areas would be right along this area right here. This is the 76.4. So we may have missed that one, but you can see 61.8 is still in play. So is the 50 and the 38.2. We're right around the 23.6. And when we get to the hourly chart, it looks like we're still within yesterday's session range. We haven't been lower than yesterday's low. But we do have a bearish candle, so things are looking bearish. We're lower now than where we opened, and it's just a matter of do we continue to go lower, and if so, how far, or do we just go flat or reverse? It's a couple different possibilities. One thing to point out is that if you go to the calendar for today, there isn't a whole lot of U.S. news. So as this slowly takes its time updating, see that there are a couple announcements at 9 o'clock today. The existing home sales for September, and then the existing home sales for the month over month of September. The existing home sales is listed as a medium-term news announcement. month over month considered or listed as a low tier announcement. Other than that, there's some high stuff out of Canada at 7:30. A lot of news release coming out of Canada, but we have 2 highs, 2 mediums, and 3 lows. So between the fact that it's a Friday, we're heading into the weekend, the fact that we've made a pretty extended run up this week. You can see that those 3 bullish candles on the equity, the daily chart for equities. So between the fact that it's a low news or slow news day, we might have trouble finding things to give the market a good push really in either direction. So today could end up being kind of just we can get that retracement, maybe just a consolidation, and look for the next push, either next week or with some major news announcement. This is the hourly chart. This is the beginning of our FIBO that we drew from the October 15th low to just yesterday's high, the October 18th high. So you can see that the retracement we've been making, we're down to, we're trading right around the 23.6% FIBO, but we'll want to get lower than that, somewhere around these 38 to 61% range, and keeping an eye on this dashed trend line as well. So, and there is yesterday's session low, which you can see we're not lower than right now. So we'll keep an eye on that low. That low can give us a signal on whether we're going to retrace today and continue going lower, or maybe just consolidate and go flat. So that said, let's go ahead and look at the Forex charts. Here's the euro, and you can see the similar formations. We have this bounce that started on October 10th. It's been working its way up, making these higher highs and higher lows. Then we got to a point on this is listed as the 17th. One thing to point out is because these charts operate in different time zones, that just because this says that the high, or it hit its last high on the 17th, whereas the equities say they did on the 18th, it still could have been the same point. So let's very likely. So if we go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. All right, so this was at 12 o'clock. So let's go 12 o'clock. We'll see if the high here was around maybe 16 o'clock, 18 o'clock. So there's 16 o'clock. And then 2 hours later is when we hit the high and dropped. And uh, 16, 14, and this is the high. This is the same time on the euro chart. So you can see we're bouncing up of that high and heading low. Either way, I drew a couple different FIBOs depending on the level you want to look at, and we'll break out to the daily chart here in a second, but I do want to point out that the 2 FIBOs I had are starting from this low, because this was the last movement where we did not have at least a 38.2% retracement. So I'll get this drawn and just kind of work our way up. You can see we made this high. There was not a 38.2. Then we made it to this high, and we didn't make it all the way down to 38.2. We made it pretty close. You can see right there we made it, I think it was within 4 pips. So the 38.2 at that point was at 3081. We made lows at 3084. 3084, and 3084. So we're within 3 pips. So pretty close, but even just get 38.2 is kind of the minimum retracement we want to see, and we didn't even get that far. So it's not like we were within 3 pips like that of the 50% of 61.8. We couldn't even get all the way down to 31.8. So that's when I keep following it up to this high. You can see we didn't get to the 38.2, so that's why I drew it all the way to this level. We have done a 38.2, even worked our way down to the 61.8, and we're trading at the 76.4% FIBO of that move, and we're bouncing off of these trend lines, and we're bouncing off of a 50% FIBO of this move, and this move was from the daily chart. And we'll zoom back out. This pink FIBO is going to be a daily retracement, and so I think this FIBO I'm going to go ahead and remove now, because you can see we're around the 76.4 and heading into some confluence. So let's just delete this. So some of the things we're seeing now, and it clears up a little bit, is this is yesterday's session low. We're below it. We haven't converted it yet, but we're definitely trading below it. We're trading below the 100-hour moving average, but just barely. That came in at 305.2. We're at 304.9, so just 3 pips. Again, the 50% FIBO is 303.3, so we're 14 pips above that, and we got as low as 303.6. So we got within 3 pips of that 50% FIBO, and we seem to be bouncing off of it now. It's kind of hard to see where this trend line would have been. It looks like it could have been right around 303.3, and this trend line we're bouncing off of it, which came from connecting these lows, and we'll be able to see these on the daily charts. Let's just go out there. So this is the daily chart. You see we connected these lows going all the way back to August 16th. It connects that low on September 5th and October 1st. We've been using as support. We broke below it. There was even one day where we converted it to resistance. Looks like on the 11th as well as on the 15th we were using it as resistance. We broke through it again on the 16th, and it's potential. We're potentially using it as support right now. We're trading right against it. So there are some reasons to consider a buy right now. The fact that we're hitting the 50% FIBO of this most recent move, and I guess I'll go back out to the daily to show where that FIBO came from. It's connecting the low from the 15th all the way up, and as you can see this low, because we did get a retracement after this move, so we moved our way up, and let's see. Oh yeah, this was another area where from this bounce, this is the movement that started the break of that target. You can see this orange dotted line was a target that we had for a reversal to move into an uptrend. And when you start following these highs, this is another area where we never got a 38.2% retracement. So we haven't had any sort of retracement or FIBO yet from since this bounce low. The other area we can look at is if we go from like the daily chart. So if we go back to the daily chart and we go from the low of that day, I'll have to make this like a green color or something. All right, then we're trading right at the 38.2. So you can see a lot of confluence here between the 38.2 of that move, the 50% of the smaller move, and these two trend lines. Let's go ahead and just enter a buy order. This is just a demo trade. So go buy. And so we're buying at 3053, and we can use that 3033 as our stop. We'll go with 3028. So that's so we got 220. It's about a 25 pip stop. So 25 pips of risk. We'll minimize that. The upside targets we have are yesterday's high, which looks like this line might be a little off. 1.31276. All right, so if we can get to that point, there's about 70 pips target there. If we can get that high, the next target becomes 3138, which we're looking like 88 pips. And then if we could get a break of that, well, we'd have to go back out to the daily chart, but that's where we'd end up looking for our next target. So, all right. Reasons for caution on that trade is the fact that we do have a bearish candle on the equities. Things seem to be heading lower. Plus all those reasons we went into for why the equities seem like they're more likely to go short today than long. The fact that there's not a lot of news, the fact that we haven't done a full or much of a retracement since this most recent move. We are around the 23.6, but it looks like we could go lower. That said, we haven't broken yesterday's session low yet, and you never know when you could get a push to go longer. I think you want to have more on your side than you never know. So that's why we're going with a demo trade on this instead of a live trade. All right, back to the Forex. Let's take a look at the yen. Let's zoom out. This is the daily chart on the yen. We've had a couple targets on this to confirm the uptrend. You can see we broke 1 and 2. We've been making higher highs since then until today. So far we have not broken yesterday's session high, which came in at 79.45. The highest we've been today is 79.40. And the 200-day moving average came in at 79.39. So we appear to be bouncing off of that right now. We've drawn a trend line here connecting the October 11th low and the October 17th low. So that's where we get this kind of steep trend line moving up. And we've also drawn a FIBO connecting that October 11th low to yesterday's high. You can see in that entire range, we haven't had a bearish candle yet. So the move's been extended, and now we're looking for some sort of profit take and retracement before we look for another low. Right now, still in an uptrend, so there's no reason to think we're not moving higher, but there needs to be some sort of a break until then, because the pair's just been extended, and we're running out of buyers. It's there's been a lot of momentum, and we're going to need some sort of retracement or profit take. Let's go into the hourly chart. So you can see these are the ascending highs we've been making since that October 11th low. These are the targets that we had in the meantime, where we had a target at 78.36. Once we broke above that, you take the movement that made the break. Let's change this to pink. And then you look for retracement. So remember, this is we broke above it, stayed above it, and then you did a retracement right down to this 38.2. I'm sorry, this 50% FIBO. So there was a potential entry there. This would have been kind of choppy. Kind of went up and down there, wasn't able to break that previous high. Then we set a new target at this high. We broke above it, so let's just take our FIBO. And this, it looks like we were bouncing off of the 100-hour moving average at that point, broke above that target, stayed above it, and then you start looking for a retracement. This came all the way down to the 38.2. So we'll get another line, another buy there. This one did break above its high, so you had some movement there. It also came down and even went below zero. So it's, in all likeliness, if you did enter a trade somewhere around here, you probably set your stop to break even and then got stopped out for break even whenever it came back down here. And then since then, the pair's just been moving higher, and I don't think we've gotten a full 38.2 on a move since this bounce. Let's see, at the time we didn't have this trend line, so it's not like there would have been an entry there. But so we made this move, no retracement. We made this move. This one did go down to a 38.2, but just barely. It was on a spike, and it didn't even make it all the way down there. So that the target came in at 78.978, and the low was at 78.983. A person may have been able to enter on the bounce of like the 79 flat number, you know, that 79 kind of round number, but I wouldn't have. Then go all the way down here. At this point, we did get a 38.2. That target came in at 79.12. If you drew this FIBO all the way from the October 11th low to the October 18th high, we got, well, it's at 23% of that. So not really much to get excited about there. You know, this is kind of a smaller move. We did get a 38.2 and have worked our way higher, but the move's been kind of extended. It's about time for a retracement at a bigger level. We have this trend line and the 100-day moving average kind of moving up in parallel with each other. They're already above the 38.2, so you know, this could be a target in the near term. But we also have the 200-hour moving average and some real FIBOs, the 38.2 and the 50 behind those. So this is the target that I'm going to look for the next buy. See, on equities, we are kind of getting to those session lows. We've been barely below it, but do seem to be slowly working our way lower right now. Let's take a look at that trade on the euro we just entered. Hey, we're down 5 pips on that. So so far looking like a good non-trade. Let's take a look at the hour. So you know, it's trading right around that 100-hour moving average. I'm not saying it's using it as resistance. I do just think that as long as the equities have trouble going long, you're going to see some strength in like the safe havens. Right now it happens to be the yen. You can see the yen getting strength over the euro. I'm sorry, over the dollar, which could be why the euro is having some strength against the dollar. But I think ultimately the dollar and the yen are going to be the stronger of the currencies. You know, they're going to be on the strong side as you get some safe haven buying on this drop in equities, especially now you can see we're working our way lower. If the equities go low, it's going to create kind of a risk-off environment, and you'll see people buying the safe havens, things like the dollar and the yen. Right now it happens to be the yen, so that'll probably be one of the strongest currencies today, but the dollar's not going to be far behind, and just because the euro is getting some strength over the dollar right now, I just don't expect that to last. You know, we found all these reasons for the pair to find some sellers, but at the end of the day, I think the sentiment created by the equities is going to win out. So you kind of have to use the equities as that litmus test or that barometer for whether or not this pair goes long. And right now, anyway, it looks like it's going to have a struggle. So let's go out to the Aussie dollar, and the Aussie pairs and the Kiwi pairs are going to be kind of in the same boat as the euro. You'll see them make this move higher, and a lot of these highs will probably be right around the same time. So you can see this bounce we got. The euro hit its session high yesterday at 5 o'clock, the 18th at 5 o'clock. And If we go to the Aussie, you can see this bounce that took place on the 18th at 5 o'clock. So the Euro's session high yesterday coincided with the Aussie's session high yesterday. Now, since then, we have the same two FIBOs that we drew on the other pairs. One was since the most recent bounce in the most recent time, or the last time we had any sort of 38.2% FIBO. We're trading at that right now with 38.2. The other one was drawn from the daily chart, which we'll zoom out to here in a second. But that 38.2 happens to come in at almost the exact same level as the 50% FIBO of this second move. So you have some confluence there. This trend line has already gone through both of those. If anything, you have some confluence at 38.2 of the smaller move. But we have the 100-hour moving average working its way up. There could be a confluence there by the time the price meets at that area. And who knows what else. Maybe I just had this trend line drawn wrong. We can connect these lows and see where that takes us. But let's get to the hourly chart. I'm sorry, this is the daily chart on the Aussie. All right, so let's start by connecting these lows. There we go. So that changes the picture on the trend line a little bit. You see the two FIBOs we have. One was drawn from this October 15th low to the October 18th high. That's this kind of teal color. And then the other one was drawn from the most recent bounce that we got right around this trend line on the 16th. And that's this pink one. We're trading right around the 38.2 of the pink one. We're getting a little bit of a bounce, but you can see we're we've already been below yesterday's session lows. We have a bearish candle. This smells a lot like a retracement. So I'm looking for a little more downside before looking for a bounce, but that's exactly what I'm looking for. I think we're still in an uptrend. We're still buyers on this pair, and we're just looking for the target to do that. And frankly, I'm thinking somewhere around this confluence here, the 38.2% of one move, the 50% of the other, and this trend line would all be some good targets to buy. You could also see we have the 200-day moving average coming in at 0.342, which is 12 pips above those two FIBOs, with the trend line running right between the two of them. Let's see what happens if we connect these lows. All right, so that's definitely a different trend line. And if we connect those highs, looks like we're probably not going to have to worry much about so we're not really targeting that either. So what was I saying? Okay, between the 200-day moving average and some of these levels, we also have the 100-day moving average coming at 0.292, which would be closer to like that's 12 pips above the 61.8% FIBO of the longer, kind of this daily chart retracement. I'm looking for the bounce before then. We'll be targeting closer to this 3130 area, about 26 pips away from where we are now, to see what kind of signal the equities can give us, and whether or not we get some strength or weakness in this pair. So let's zoom back out. So there you go. You can see the 38.2. We traded just a little bit below it, and the last candle stayed completely above it, so it was able to use it as support and kind of build a base, but hasn't gotten a lot of carry through yet, and we'll just kind of keep an eye on that level just because I'm expecting the pair to go a little lower, and then I'll get interested in the pair once it gets to this 0130 area, 1.0330 area. I want to see what the pair does there. Looking at the Kiwi now, whereas on the Aussie, and this is the Aussie daily chart again, you can see this uptrend that's been developing since October 8th. The Kiwi has not been able to find as much strength. So if we go to the daily chart on the Kiwi, you can see that going back to October 8th, the pair has actually been going down. Like the pair got to lower lows on the 15th and the 16th, and it's been going higher since then, but even then it's been kind of struggling. One thing to point out is that on the Aussie chart, on the daily, you can see that we have a bearish candle. The candle's red on the today's daily candle, whereas on the Kiwi, it's bullish. It's a blue candle. So what that tells us is that when we go to the Aussie Kiwi, the Kiwi, at least for the current session, has been stronger than the Aussie. So we're going to get a red candle here, a bearish move. It's been going down. You can see that. But we've been developing an uptrend. So kind of like some of the others, this pair is due for a retracement as well. So we likely will see some of that Kiwi strength over pairs like the Aussie. And that's why the Kiwis look stronger. The other reason for that is when we're in this uptrend, we're seeing pairs like the Euro and the Aussie were some of the strongest of the sets. Kiwi was closer to the middle of the pack, and the dollar and the yen were the weak ones. When you get a retracement, that whole order flips. So now, whereas the Euro and the Aussie were both stronger than the Kiwi during this uptrend, while we're retracing anyway, you're going to see the Kiwi be a little bit stronger. So that's where we're getting this bullish candle from. When we zoom in, we'll see what kind of retracement we got. So let's take a look at that. So here's the FIBO. Went from the October 16th low to yesterday's high. We did get a 38.2, and we also bounced off of the moving averages. You can see they were running really close to each other and flat, and eventually even converged and crossed. So that's a signal that the pair was looking for direction. Once you see these things run flat and cross over each other, it's a sign that the pair needs its next signal. Looks like we did get a bounce off of those areas, the 100-hour moving average. We potentially bounced off of it 3 times, 1, 2, and 3, finding support there. We also have this target that we set as a confirmation of the uptrend, so there was a test there. So between the test at 8185, the 38.2 at 8183, the 200-hour moving average, which at the time came in at 8179, and then the 100 moving average, which came at 8175. So if we just go to the lowest target there was 8175, and the highest was 8185. So within a 10 pip range, you had those 1, 2, 3, 4 areas to use as a stop. So you had 4 different areas for sellers or for buyers to come in and buy against. They were able to push the pair a little higher, but since then you can see it's been moving its way down. So we did get a little bit of a push. We found some buyers at those 4 different areas, but it was short-lived. So they got as high as 8205, so about 15 pips higher than the target, and they've been coming back down since. We're getting close to those areas again. If we can get down back to somewhere between that 8185 and 81, looks like we're looking at 80 area now, 8178 area. You could get potential bounces all off of the same areas, but again, if equities are going short, you're more likely to get a break of these areas and further move to the downside than you are to get a bounce. So these are definitely an area to keep an eye on for a bounce longer, but you'll want to double check the equities that, and there are also reasons you'd want to be more interested in the Aussie or the Euro at that point. Let's go ahead and check the Aussie yen. Again, 1, 2, 3, 4 days of pretty solid movement to the upside, especially on the 17th, just one-way street on that day. Since then, we made a high at 82.50 and have been coming off of that. I did draw a trend line connecting some of these lows. So it really depends on if you want to use the daily candle or the hourly, but you can see that's what the trend line ends up looking like. I drew the FIBO from the most recent bounce because we did get a retracement back on the 12th, but starting on the 15th, we have not had a retracement, so that's where the FIBO is drawn. The 38.2 comes at 81.53, which is about 50 pips from where we are now, so there could be some downside. We're trading right at the 200-day moving average that comes in at 82.12. We're at 82.05, so 7 pips below that. But the 100-day moving average is at 81.05, so we are 100 pips above that. The fact that we're so far above some of these areas, 50 pips above a 38.2, 100 pips above the 100-day moving average, just is another example of how far the pair's moved recently and how quickly it moved. So to create that much separation from some of these targets is just how quickly it moved, and the fact that it moved so quickly is why we need a retracement. So we see some of these areas. This is where we started the uptrend. We had this target based off of this high, looking for some buys. There were a couple in here where we probably got in, then got stopped out. This is an example where we tested the target as well as some moving averages. There may have been a retracement here. If we got in here, we likely got stopped out a couple days later. Since then, we set another target. We did break it and converted. We had a target there. We're able, there's potential for an entry there, especially if we ran a FIBO. And then once we broke that session high, you do a FIBO of that, and there was potential for another entry here, and just working our way up. So on this pair, I'm going to adjust this trend line a little bit to move it to that low, maybe even this low. I'm just looking for the point where we're still getting bounces off of it, and right now we appear to be breaking through it. You can see a couple candles ago we may have found a little bit of support there, got a little bit of a move, but are hitting lower now. The reason this pair is moving down while we're getting bearish candles on the Aussie yen, where we're getting bullish candles on the Aussie dollar, is because we're getting so much strength from the yen over the dollar. So you can see the more and more the dollar yen can push to the downside, this yen strength we're seeing pushing it down, that's the same strength that's pushing the Aussie yen down. That's why we're getting these bearish candles here and some more pressure to the downside. Since it's likely to strengthen the yen that's doing it, you're not seeing that same pressure on the Aussie dollar. But for a lot of the same reasons, you can expect that strength to eventually come in. If you have the yen weighing down the Aussie yen, it's likely you're going to see that same pressure holding the Aussie dollar down. Unless you really get a spike to the downside on the dollar yen, it's not likely that you'll be able to see the Aussie yen going down, but the Aussie dollar going up. So again, that's one more reason to hold on for more downside on either of these pairs before getting in on a buy. We have not gotten to yesterday's session lows yet. Those came in at A183. We've already talked about the trend line. Some areas coming up for potential buys. We have the 100-hour moving average come in at A148. That's just 5 pips below the 38.250 at 81.53. So that would be the first target that we look for buy. We want to at least get that 38.2% FIBO. The 200-hour moving average is moving its way up, but I still consider it out of play at this point. Down at the 50% FIBO at 81.22, we do have an area where we had a good retracement last time. You see this whole series of candles, and I'll do kind of a box to highlight it right there. There we go, zoom in there. So we had the 50% FIBO where this was just another area where we were able to find some highs. We came down, did a retracement, and then worked our way back higher. So we spent some time above it, spent some time below it, and then spent some time, again, both above it and below it before getting our bounce to the upside. So this was an area that had kind of a sticking point for the pair before. It comes in at the 50% FIBO, so that would be another reason to look for it to have another sticking point there again and see if that's where we can get the bounce. So kind of as usual between this 38.2% FIBO and the 50% FIBO is where we'll be looking for some signs that the pair has made its retracement, took its profit, and ready to move higher again. So I'll remove that. That's the target on the Aussie yen. Let's look at the Kiwi yen. Again, seeing a bullish candle on this chart versus the bearish candle on the Aussie yen because of that Kiwi strength. So something has pushed, or given the Kiwi strength over a lot of pairs today. Let's go back to the economic calendar. Again, sorry, my internet, or I think it's just this browser is running slow. I'll restart it, but I do want to see if there's any Kiwi news that came out overnight. So we're getting into, come on now. So here's Friday, some New Zealand stuff. So we did have some low and medium tier news come out. The migration numbers looks like there was a previous drop in migration, and that change went from negative 270 to positive 90. The credit card spending was, I guess, higher than expected. I don't know, like last time around it was 0.2, now it's up to 0.9, and year over year went from 1.9 to 1.5. So seem to be mixed signals to me. We could look at some of these headlines and see if anything came out of New Zealand, but for low and medium tier stuff, and considering that neither of these are highlighted really as green or red to indicate that they were far above or far below expectations, it's hard to see why the Kiwi is getting this kind of push, other than the fact that it just needed it. Especially when you look at the Aussie Kiwi, the move that it made, it was just due for some buying. Let's get this. I'm just going to close that. All right. Waiting. Okay. So the daily chart on the Kiwi yen, we have, all right, so we had some targets to go high here at the 64.25 area, very choppy up and around that. So there are probably some entries there that got stopped out. Had another target at this 64.52 area, broke above that on the 17th. There was probably some confirmation, maybe not a retracement though, so it's hard, we'll have to get to the 1 hour to see if there was an entry. Yesterday we got a very doji candle, so if I zoom in, it might even be hard to see this candle because it's so small and narrow. It opened at 64.850 and closed at 64.859, so it made less than 1 pip movement open to close. So movement less than a pip yesterday. We're above that right now because frankly we didn't have very high to go, but we're not above the range. The highest point that the pair got to yesterday was 65.21. The highest we've gotten today is 65.11. So we're about 10 pips below that high, and trading at 64.90 right now. All right. So if we do, let's just go ahead and put a FIBO from here to here for just the sake of being aware of that. Trade it, change its color so we can keep the two separated. Let's get into the hourly chart on the Kiwi yen. All right, so you can see we have had retracements since this low. That looks like a 38.2 there. This looks like another, at least a 38.2 of this move, which is why we started our FIBO here originally. We've done a 38.2% of that, have worked our way higher, kind of like the Kiwi dollar. Remember, we did a 38.2 and have been working our way higher. So this goes from the October 16th low, and you're probably around this area. This was the October 16th low, so the FIBO would have gone from there to there. Either way, since we did get a retracement, we're using this as the most recent low. Okay, so we did hit the 38%. Didn't quite get to the 50, working our way higher. But if you do on the daily chart, from the daily candles, the October 15th low to the October 18th high, the 38.2% comes in closer to 64.63. We're 30 pips above that right now. We have the 100-hour moving average coming at 64.59, so 4 pips below that. The 61.8% 5/0 of the smaller move comes in at 64.60. So within 4 pips of each other, you have these 3 levels coming in. They're at 64.59, 64.60, and 64.63. You're seeing kind of a convergence here of these different areas, as well as the previous target at 64.52. So really within 11 pips of each other, you have this whole range of areas to buy against right there. You see 1, 2, 3, 4. So we'll be looking for the pair to get this low. We can start connecting some of these candles. We'll get the trend line going there. So if we connect like these lows, that was pretty sharp move. But if we connect these lows, we have this trend line to work with. We'll see if the pair can get that low and give us a bounce. Those are the targets for now. Again, looking for some downside before we look for a buy. And let's get back out to the daily real fast to see. Okay, so we've connected those 2 lows. So that, and let's just, on the daily chart, we could use that one. We'll go with using the daily chart to connect the lows. Right there, well. Okay, so it actually connects that low. I don't know, we'll be better off drawing it like that. I don't know. So this is the trend line. If you connect the lows on the daily charts, the trend line would be quite a bit shallower, not as steep if you connect the lows on the hourly charts. Since you could go either way, I'm going to keep them both and just kind of keep an eye on them and look at either of them to see if we get some signals of a bounce. Let's get to the Aussie Kiwi, and then we'll go to the dollar index and call it a morning. Aussie Kiwi, you can see the reversal formation we've been making. We use this as a target for entry. We got above it, and there was some conversion, so there's likely some entries there. Then we did a retracement on the daily basis down to the 50% 5/0, so there could have been some entry there if we're on top of it. Either way, we set a new target to the upside, which we got above, and likely we've stayed above, so we've converted that as well. So there are likely some entries here and here and here into this uptrend. And now we're just looking for the next retracement, just like we did a few days ago when we did a retracement of the low from October 8th to the high on October 11th. We got a retracement of that and had a 5/0 for an entry. Now we're connecting the low from the 16th to the high on the 18th and looking for a retracement of that. So if we can get a good 5/0 here, we could have another potential entry going along. Let's look at the hourly charts. Here are some of those entries I was talking about where we had the targets. You got above it, do a retracement. Another retracement there. I think this is if we had done that 5/0 from, where you go? Okay. Like do a 5/0 from, whoops. So from here to there. There's a 38.2, but I don't think those are the lows. Let's go back to the daily chart. So it was the low on the 8th that we want to connect. So again, we'll go to low on the 8th to the high on the 11th, and it was a 50% 5/0. And you could also see that was ended up being the week's range. So it's from the week low to the week high last week. We'll go back out to the 1 hour chart. We'll look for the low on the 8th, which looks like it would have been here. Well, sorry, looks like it would have been, if we're connecting the weeks range, there's the 5th to the 10th, and you can see there's the 50% FIBO. So I'll go ahead and put kind of a green circle there. The fact that if this FIBO were drawn, we got to the 50%, and there were some signals for going long. Let's get rid of the FIBO. So that's kind of the same thing we're looking for now on the daily chart. We have the move all the way up, and we want to see a retracement to some point that we can get in on an entry. We can start connecting some of, you can see that the trend line changes a little bit once it gets to this low. So we can use this trend line and see if there's any kind of convergence by the time it gets to like the 50% of that. We're crossing through the 61.8 now, and the pair would have to drop pretty far to get down to that intersection. But you know, the 50% FIBO comes at 25.88. This low came in at 25.93, so they're 5 pips away from each other. Again, another area where the pairs had some sticking point. You see these lows, those lows. We have the trend line coming in. 25.52 or 25.72. I'm just looking at the fact that we have last week's high was at 25.72, which is 16 pips lower than the 50. We're definitely closer to the 61.8% at that point. But we are starting to get some sort of a range here to look for a bounce. So kind of between the 50% FIBO and the 61.8. A lot of stuff happening there. We have the trend line, so we'll see where that ends up being once we get to that level. But again, we could run a FIBO from this low to this high and see what kind of retracement we got. Here, I better make it pink so it stands out. So we did get a 50% FIBO of that move. You could look for it to bounce off of that area and go long as well. It's a smaller move with a smaller retracement. So if it does go long and this ends up being the bounce, darn, I don't mind not getting in at this point to hold on to see if we could get a bigger retracement, because the pair's been moving up for quite a while. This was the low back on the 2nd. We're at the 19th now, so you can see the uptrend the pair has been making. And I want a retracement more like this, one of those retracements on a daily chart basis before getting back in. We've had a lot of these little kind of hourly chart basis retracements, and I don't know, I just want something a little more substantial before getting in at this point. Let's look at the dollar index. This is this usually gives us an idea of kind of where what the dollar yen is going to look like. Usually, if you see the dollar index going up, you'll see the dollar yen going up. It's kind of the tiebreaker almost. That hasn't been the case necessarily lately. You see, we had some bounces here on the 17th, the 18th, a couple bounces on the 18th going higher. So you would expect to see the dollar yen going higher at some of these areas as well. Whereas the dollar index has been more of like a downtrend, especially since the 9th, working its way lower, making these 3 lower highs. The dollar yen has been in an uptrend. So as the dollar is getting weaker on the dollar index, it's being stronger against the yen. Not really sure what to make of it, but we've had, if we go out to the daily chart, we've had some lows here that we're targeting for this downtrend. We had the original one. We broke it, did a little bit. We did quite a bit of retracement. If there was an entry there, we probably got stopped out, and we'll look at that when we get to the hourly chart. We ended up making a new high, connected them to get this trend line. From that high, we also had a higher low, which we used as a target again to the downside. We broke through, converted, and have been moving lower since. But now we're coming back and we're testing that low. So if we do a FIBO like from here to here, so we're at the 61.8% of that. roughly. So you had some convergence here of those two areas. Let's go into the 1 hour. So there's that move. This is where we got to. The target was at 98.97, and the 61.8 was at 98.95, within 2 points of each other. This is yesterday's session high. We've gotten above it and have kind of stayed near it. It doesn't look like we've converted it. The low on this candle was 98.87, so the low of this candle matched perfectly the previous day's high. But we've gone back below that right now, so good potential there for a reversal. Possible reason to see some dollar weakness, I guess. But like I said, the correlation really hasn't been doing a whole lot for us lately. But if this goes down, you would see some dollar weakness, which would kind of lend itself towards seeing the dollar yen move its way down, and then seeing some of these yen crosses sell off as well. Let's see what the equities are doing, because it looks like we're getting some blue candles now. Equities are, let's see if we refresh here, appear to be making the way off of those lows, but not by much. The low of this candle is 1452. We are currently at, man, my computer's moving real slow right now, sorry. I can't even see what we're closing at because my computer isn't cooperating. So we're currently at 1453. Again, that low is at 1452, so we're just 1 point above the low. Hard to see that as reason for getting bounces on any of these pairs. Let's look at what the euro has done since we entered that. Well, we're trading pretty much where we got in, but you can see it's not looking too great. Again, we're down about between 4 and 5 pips, about 4.5 pips. Pretty much right where we entered. If we look now, if we were to buy right now, we would get at 305.1, which is 2 pips lower than where we did get in. So not much carry through there, and again, probably more reason to expect some more downside on this pair than upside. And so we'll keep an eye on equities, see what this pair looks like. We just got a new hourly candle. We'll keep an eye on it. Not a lot of news to give us much of a push. Again, it's Friday as well, so there might be not as much carry through on some movements between the fact that we're heading into the weekend. We've had such a strong week already, and there isn't a whole lot of news to give us much of a push. A lot of reason to expect a consolidation, maybe, just move flat, or to just continue this retracement and keep moving lower. Since that's just the direction traffic's going right now. We'll keep an eye on equities to look at signals on the Forex. We talked about what areas we want to buy in some of those pairs, and that is the drill down for today. So thanks a lot.